Okay, so in the previous video, you have to watch that video. You cannot watch this video if you didn't watch my previous video. My previous video was understanding journal entries or the process of your um job costing journal entries, right? The process. Now we're doing the actual work. Now we're doing past paper. So past paper 19 marks question 2. This is last year's past paper, by the way. Job costing. Alright, so the company uses a job costing that uses the integrated system. Very good. Integrated. Because your what's the other one? Integrated versus there's another one. Damn, I forgot. Right, there's another one, but basically it'll differ slightly, right? Oh, interlocking here. So when I say integrated system job costing, you know we're doing this, right? Smile, because integrated is very easy. That's like our accounting journal entries. Okay, so if you never watched my previous video, I told you materials. So these are all the ledgers here. So this means when they're doing your debits and credits, your entries, you're only going to use these accounts only, right? So what you must know, what you must understand is your materials control account is your direct material account. Wages control account is your direct labor account. Right? They're just confusing us. They might say instead of material control account, they say store control account. That's direct material account. Same thing, right? They're confusing us. Okay. So number one, this is our first journal entry, number one. So let's put number one here now. Number one. Okay, so number one. Materials amounting 4.4 million was purchased on account. Right? You purchased materials. You purchased. Because you purchased materials, right? You know you're going to debit materials account. So debit. Oh man, come on. Not now. So obviously now we're going to debit the materials control account, right? 1 second. Okay, it's fine. I'll leave it like that. Okay, no, I'm not gonna leave it like that. Plus screen. Okay, so debit material. Now I'm not gonna write the whole thing here, but MCA. Let's put it because of space. How much was it? 4.4 million. 4.4 million. And then what you're gonna credit, right? Purchase on account. So it's your payables, account payables. Just take note, anytime you purchase on account, put payables. Don't put creditors control. Account payables, right? But if you put creditors control, same thing. And you put, now because of space, I can't put the other 4.4 million, but you know what to do. Second journal entry, direct materials were issued to jobs. Now, your direct materials account, your materials control account, right? It needs to go into somewhere. If you're issuing a direct material, it's going to go into work in progress. If you're going to issue an indirect material, it's going to go into factory overheads. So you're either going to debit either of the two, depends if it's direct or indirect. You need to ask yourself a question here. Direct. As soon as I say direct material is issued out of it, right? You're going to debit work in progress, right? So debit work in progress. Credit, obviously, is going to be your your material control account, right? And the amount 1.98 million. Now I'm not going to write the amounts, right? But you know what I mean. Now, if they told you it was indirect, it won't be debit work in progress, it'll be debit factory overheads, right? Store acquisitions 3. For indirect materials, total 220,000. Store acquisitions for indirect materials. Okay. So, store acquisitions means out of your material control account, they're taking some indirect materials out. So easy. This is indirect materials being issued. So, like how we did over here, but now you'll say debit factory overheads. Debit factory overheads. Or whatever they said over here. Okay, so you actually have to say manufacturing overhead control account, not factory overheads, right? So manufacturing overhead control account. Remember, you have to say what they said over there. That those are the ledgers we're using in this business. So, okay, so you know what I mean, right? Manufacturer overhead control account, mocha. and you put the amount there, right? And you're going to credit the materials control account because it's coming out, but you're issuing it to your overheads because it's indirect, right? Total factory wages. Now, as soon as they say total factory wages, total factory wages, see, you got your wages control account, that's your direct labor account, right? So what you're gonna do when they say that, right? So total factory of 3 million were paid, 80% of total wages paid to direct labor. Okay, so number 4, you're gonna say direct debit. What is it? Wages control. So I'm just gonna double C, wages control, and you're gonna put the full amount, right? 3 million. And now you're gonna credit. Now they say we're paid, so it's obviously gonna be bank, right? Bank. So I'm just bank 3 million, right? So you put 3 million. I'm just seeing somewhere 80% of pay total paid direct labor. Okay. So now, perfect. So that's actually now a 2-type journal entry. So you're putting into your labor account, your wages control account, 3 million. But now remember, your direct labor account needs to go on to work in progress or come out from there. So it's telling you over here 80% were paid to direct labor. So I told you, you're either getting direct labor or indirect. If it's direct, it goes to work in progress. Indirect goes to factory overheads. So because of this 3 million, so what's 80% of 3 million? 80 times 3 million. Okay, 2.4 million. So you're gonna, now this is part of this journal entry, right? But it's a separate journal entry, obviously. So you're gonna debit work in progress with 80% of this amount, 2.4 million. And then you're gonna credit your wages control account, and you put this amount, same amount, right? But then the other part of it, the 600,000, that's indirect labor, so that goes into your factory overheads. So debit your manufacturing overhead, markup, credit your labor account. In this case, the business uses wages control, and 600,000, right? Now you'll actually see this if you have to draw the ledger. The ledger direct labor closes off and it sends it to the work in progress and factory overheads. That's what we actually want to do, right? Remember, direct material, direct labor, factory overheads, all accounts needs to be closed off and go into work in progress in all those accounts, right? So remember, what we're doing now in the material account and labor account is asking if it's direct or indirect. If it's direct, we're sending it to work in progress and we're minusing the account, crediting the account, right? If it's indirect, we're sending it to factory overheads and you're crediting the account. That's what we're doing. So as soon as you see direct material, something with it, ask yourself if it's direct or indirect. Direct, you're going to say debit work in progress. Indirect, debit factory overheads, and you're going to credit that same account, okay? Depreciation workshop machinery. As soon as they say depreciation of machines, debit factory overhead. So MOCA. And then credit accumulated. I'm just going to say ACD, accumulated depreciation, right? Done. With the same amount, right? The owner incurred personal expenses not related to manufacturing equipment. So the owner incurred personal expenses. Now, we do not do anything with that, right? The owner include personal expenses, so we ignore. Because it has nothing to do with the business, manufacturing business, right? You will know that you don't journalize entries relating to the owner. That's accounting rule. Manufacturing, okay. Total overheads amounts to 1,010,000 allocated to jobs in February. Okay, so very easy. As soon as they say these exact words, overheads were allocated. Overheads were allocated means you credited the overheads account and you debited work in progress. I told you all accounts, direct material, direct labor, factory overheads needs to be closed off and go into work in progress. So this allocation closes the work in progress account and goes to work in progress. Now, as soon as they say that, you're going to see credit work in progress. Then you're going to debit debit work in progress, credit uh, your overheads, obviously, your overheads. So your mocha, right? So now when we did that, the amount of 1,010,000, right? Okay. So now after you did this, they say close off the manufacturing control account. When you close off the manufacturing control account, your receive is under recovery or over recovery. Now it's very easy, right? So don't get stressed about it. Okay, come on now, why is this thing not working? Okay, but you understand this is the overheads account, right? This is the debit side, this is the credit side. All your entries that you made now, you must put it in the graph, right? So let's see. Manufacturing overheads control 4.4 million. So because of space, right, I'm just going to write 4.4 million here. 4.4 million. A credit 190. Wait, what was journal entry 2? Wait, issued to jobs. Makes sense. Direct materials issued to jobs. Sorry. MCA's materials control account. We working with manufacturing control account, MOCA. Sorry, that's not supposed to be there. Then see, we just look at all the journal entries that relates to your overheads account. So MOCA, there we go. Number 3 is MOCA. For number 3, 220,000. Actually, no. I'm just looking. 3 store acquisitions. Debit material overheads control account. Okay, yeah, that's fine. That's 220,000. That's a MOCA. So 220,000 was over here. Let's see if there's more journal entries related to MOCA. MOCA, yeah. This is 600,000. 600,000. Then let's see. We had MOCA over here. This was the depreciation. Yeah. 198,000. Okay, so we're done with all that. So now, the last one. Debit MOCA credit. No, sorry. Debit work in progress credit MOCA. What was the amount? 1,010,000. A big number, yeah. This was for the allocation. As soon as you say allocation, you're going to debit work in progress credit MOCA, because your overheads account is going to look like this: 1,010,000. Right, done. Now you're on a balances account, right? So balance account, look for the total. Let's see. Was this 1 point? Yeah, this is actually 1,080,000. Okay. So let's balance it, right? So calculate which side is bigger. I can already see the debit side is bigger. If you work at the total there, that's 2.8 million, right? Nice number. Right, 2.8 million. So obviously this will be under allocation. Remember, if you got a balance on the credit, it'll be under allocation, right? Or under recovery. If it's on the debit, it'll be over recovery. So your contra will be cost of sales here, and the amount will be 2.8 million minus 110. 1,790,000. Now this entry, you will say credit your over now. Yeah. So we finish this entry, right? But because I say you balance it off, when you write this 1,790,000 in your this account, you'll say credit overheads, debit your cost of sales. So debit cost of sales or credit your overheads, right? With that same amount. That's how you record the under recovery, right? And then jobs with a total cost of 4.8 million was completed. So it just give you the cost. That's easy. Debit cost of sales and the amount, same amount, 4.8 million. Credits, finished goods. always when you sold that credit finished goods. And yeah, that's done, right? So that's all your journal entries, right? So remember I told you it's very easy. Everything is direct material, direct labor, factory overheads. They just give it different names and stuff. I'm just seeing over here. Okay. So number 2, explain what is under and over absorption. Okay, easy. Under and over absorption. So you see this, we estimated how much the overheads will be, 1,010,000. However, the actual overheads, right? Actual is 1,790,000, right? So because this is an under recovery. No wait, yeah, under recovery. And we fill in the balance. So it's already 790,000, yeah. Yeah. So this is an under recovery, right? You estimated 1,010,000, but the actual was 2.8 million. So obviously this will be an under recovery. So you estimated too less. So what it has impact of the gross profit. Now you're adding it, saying debit cost of sales. So obviously your expenses are going up. So your net profit is actually going to go down. So yeah, that's it for this video.